Hey guys, my name is Mike Munzing with Munzing Mortgage Group. Got some great information on the new Dodd-Frank replacement. I'll be right back. Okay, now I've been putting information together on that Dodd-Frank replacement, how that's going to affect our market and what's going on out there. But Brian and Frank over at the National Real Estate Network put a great video together this week. Figured I might as well use that. Let those guys do the work. They're awesome. Go look them up. They're fantastic. Here's their take on what's going on.
All right, so Dodd-Frank was rolled back late last week.
What?
And here we are on Tuesday, and the housing market, it hasn't crashed yet.
It didn't?
Nope, there's no rioting in the streets. Wall Street didn't throw a party or a parade. So why are the likes of Elizabeth Warren on the warpath right now saying things like, I don't understand how anybody in the United States Senate could vote for a bill that's going to increase the likelihood of a taxpayer bailout. So much vitriol and hyperbole here. It's just crazy.
Oh my gosh. I mean, consider this. If there's one group of lenders that did not play a role in the bailout, it was the credit union.
Right, they're too conservative.
That's right, seriously. Go into any credit union, and they wear it like a badge.
They do.
We don't do all those risky loans.
So, would it surprise you to know that the National Association of Federally Insured Credit Unions are singing the praises of the Dodd-Frank rollback? Now, why would they praise this if it's going to mean a return to risky, crap loans that will shuttle in the next dark age, right? Well, there's a simple answer for this.
Yeah, it's not gonna happen.
Ta-da!
Or at least from this bill.
Nope.
Why is that? Well, here's your first reason.
The first reason is we did not roll back Dodd-Frank. Yeah, we didn't roll it back. We replaced it with the Economic Growth Regulatory Relief and Consumer Protection Act. This is the one that Hensarling was doing and Crapo were doing. I can't believe they finally got this thing through.
Got it, that's right. We replaced the bill with a less restrictive, more consumer and small bank and credit union friendly
Right.
piece of legislation.
Now, the reason the credit unions like this is because Dodd-Frank had a one-size-fits-all approach to its policies that it passed. So enforcement for large banks, well, that was the same as for small banks and credit unions. The unintended consequence of this approach is that the little guys, they couldn't compete. They could not afford the high costs required through the policies with their smaller production levels. And this is the main reason that we saw the death of the new bank formation over the past 9 years. And make no bones about it, guys, the lifeblood of our economy runs through the small banks.
That's right, they do. We bank with a small bank.
Yeah.
I mean, for goodness sake. Or to put it another way, the replacement bill will make it easier for small banks to compete. And that's not good. That's Tony the Tiger great.
You're right, and what's that question for us is, what is the impact on the qualified mortgage? We don't know that yet. What will become the fate of the Consumer Financial Protection Bureau? And of course, non-QM loans have already become quite the rage, right? And is this going to lead to more and aggressive non-QM deals? And finally, will a more lax regulatory environment lead to the rise, as we said earlier, of the mortgage broker? Now, I think the latter two, Frank, here are foregone conclusions.
Okay, so to be clear, the Consumer Choice Act, which replaces Dodd-Frank, is not a return to the good, bad old days, right? Where anyone and everyone could write a risky loan.
No, far from it. And it does ease the regulatory burden on lenders, which will bring down lending costs, which in turn will allow lenders to lend to more people at better rates.
Yeah, and keep in mind, those hurt first and hurt the worst are the low-income and underserved communities. So, with that logic, the ones who should feel an ease in lending the most are those same communities. And we can all get on board with that, I would hope.
This is one thing that nobody really talks about. Okay, so consumer protection, it's great for you because you got money and you got money in the bank.
Right.
Okay, this is disproportionately hard on underserved communities,
right,
many of which are minority groups.
Right.
And so these are the ones who we've been hurting. So having a little relief in terms of regulation here, which is going to lower the cost, it's going to allow banks and credit unions to offer more products, aggressive products, for those communities, and everybody can get on board with that, right?
I would hope so. Apparently not Elizabeth Warren.
No.
So
she only wants to lend to rich people.
Right.
You know why? Because she's rich.
She doesn't want a lot of small banks. She just wants the gigantic banks.
Right.
That's what she wants.
Under her thumb.
Right, under her thumb.
As you heard them say, mortgage brokers are going to be coming back strong, along with credit unions. But this is great information. Should be easier, less regulation. get these deals done for you. It'll be fantastic. Well, hey, we're heading into a beautiful weekend. Love being here for you. Call me anytime at 949-689-5626. Want to get this quick update together for you so you know what's going on the market. Rates are doing great. They're actually hanging in there. The market's coming back. You got inventory coming back. Let's get those buyers out there. I'm here for you. I'm here for your buyers. Call me anytime. Once again, Mike Munzing, Munzing Mortgage Group. God bless you. God bless your family. God bless this beautiful country. Let's work together. Bye-bye.